Welcome. You're listening to the Best of Investing on News Talk 910, sponsored by Pacific Trade Exchange, your best in trade. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience, listening in. And I'm your host, Edward Brown. And I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Brian Burton of Praxis Capital. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. And the vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouseforfun.com. You can reach them at 916-777-5511. And today's trivia theme is Fall from Grace, Athletes Who Have Fallen. Our website is bestofinvesting.com. Now check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Don't forget to record our show on a website called dar.fm. A couple of quick reminders: World Wraps in Corte Madera and Santa Clara is still giving our listeners a free smoothie with purchase of a wrapper bowl. If you mention the Best of Investing, go there for lunch today. Best wraps in town. And today's guest is Mark Moore from Home Liberty. And Home Liberty is a company that helps homeowners struggling with negative equity in their homes. Now, I know it says Home Liberty. That's not Homeland Security. That's different. Okay, just want to make sure.
Different.
All right, Mark, welcome to the Best of Investing.
Thank you.
Okay.
So I was curious exactly what it is that you do there, and how does the process work?
Well, Home Liberty is designed to help families with severe negative equity. It turns out that most people that have severe negative equity are not struggling to make their payments, they're just way underwater. And the programs that are designed out there today are designed to help lower your monthly payments, which is always nice, but it really doesn't reduce the principal. So Home Liberty's process is to directly reduce the negative equity that you are under by purchasing the home, typically from a bank at foreclosure, REO, or possibly from an investor, and then immediately resell it to the homeowner. And one of the big innovations with Home Liberty is we provide seller side financing, so you don't have to get third-party financing in order to repurchase your home.
How do you do that?
Well, we're a private company, so we've raised a pool of capital for purchasing the homes. We purchase the home typically at a discount, and then we sell it for an upside to the homeowner. With the seller side financing, we create a mortgage. It's a 30-year mortgage, fixed payments, and with no prepayment penalty. So it's pretty nice. Pretty nice little setup. And then we sell we carry that loan for the life. So they get to pay off the loan or refinance or sell the home.
Well, given that there are about a third of the outstanding mortgages out there are underwater, it would seem that you'd have a pretty large potential customer base, yeah?
We like that, as a matter of fact. It's very large. Recent numbers that it's about a third of all the mortgages and about 10% of all the outstanding mortgages are underwater.
So for the audience out there, let me get this straight, Mark. Home Liberty allows someone who's underwater and wants to keep their home an opportunity to buy their home back at today's value. So let's say they bought the home in 2005 for $600,000 and today it's worth $300,000, but they owe, maybe they bought it with 100% financing, they owe still $600,000. You provide an opportunity for them to buy back their home for today's value.
That's exactly right. So that's very common. That's the underwater. We have customers that are 200, 300, 400K underwater. The very last one that we just saved their home was very similar to what you just described. They owed $675,000 on a home that we resold to them with financing at $289. So they saved substantial amounts of money.
What's the interest rate that you charge them? Because you're providing the financing for them, right?
Right. It's definitely higher interest rates because
It's private financing.
it's
Yeah,
private
but if
financing.
it's on a lower principal amount, then it probably is more than made up for that.
It absolutely is. Our customers typically reduce their monthly payments by about $500 to $1,000 a month. The interest rate that we charge is 10% or 12%, and it's depending on the down payment. So I don't know how much we can get into that on the radio, but,
Well, we won't, but
it's the thing that's very interesting about the Home Liberty program is for first off, there's no prepayment penalty, so again, if they get better financing, we encourage them always to do it, even if they want to do it for the purchase originally.
So you don't lock them in for any period of time, you're selling them their home back, you're providing financing, they do have to have capital to come in with a down payment of some sort, so there obviously is a qualification process for this potential underwater client, but it's a no prepayment penalty loan, let's say it's a 10%. If you're buying back your property for half price, it's likely that even at 10%, your monthly payment's gonna be significantly less than the payment you were making to the bank, or maybe you stopped making to the bank.
Significantly less. And the one other thing to keep in mind is what we call the Fast Track to Freedom program, which is part of that. And
it's very
that,
patriotic, by the way.
Well, thank you very much. I'll get into that later if we end up talking about other aspects, why the naming. But the Fast Track to Freedom program applies 100% of the principal for the first 13 on-time payments without interest accrued. So you've heard of interest-only loans, right?
Yeah.
This is the opposite of that. This is a principal-only loan. Wow. For the first 13 payments. So effectively, it's a zero-interest loan for the first 13 months. If you refinance after 24 months or 36 months, you can reduce the effective interest rate substantially. But
Well, yeah, if it's 10%, then effectively it's 5% if you go for a full 2 years.
Exactly.
I figured that out in my head. I didn't need a calculator, and I didn't need to take off my shoes and socks to count my toes.
So what is the qualification process for an underwater homeowner to qualify for the Home Liberty program?
It's easy to understand. Do you want to keep your home, and do you have an ability to afford your home? There's a number of people that are defaulting on their loans because something tragic happened and they really are in a home that they can no longer afford. Home Liberty is not for them. We find there's a 10% of all the outstanding mortgages, people that are in a home, they want to be in a home and they can't afford it, they just don't like the negative equity. For them, we have very standard underwriting. We've got a 31 DTI front end, if that means anything to your audience, basically about a third, debt to income ratio.
There you go. So
your very traditional FHA qualifications and 45 back end. It just means that if you're spending more than 35% or 30% of your household income for principal and interest, you're probably in a home you can't afford.
FHA? I'm just kidding.
So that's it. The thing that's very different is obviously anyone that has decided to do a strategic default has stopped paying. And because of that, their FICO score, their actual credit score has been affected. So we don't calculate the credit score, but we do look at the credit. So the payment history and their ability to repay, that's what matters.
So you mentioned the term strategic default. What exactly is a strategic default?
That's a great question. So strategic default is very simply someone that can afford to make the payments on their current mortgage, but because it's financially not in their family's best interest, has decided to stop throwing good money after bad.
So a guy that's 50% underwater and doesn't want to be a chump anymore because he's listening to the news, or maybe has neighbors, and maybe he's the only guy in the street still paying
That's
his
not being a
mortgage.
chump, that's being honorable.
Well, yeah, there's honorable, but then, and I guess we can talk about maybe later about the ethics of it.
Part. We're going to get into that. We're going to cut to our first commercial break. We're in the studio here with Mark Moore from Home Liberty, who is going to educate us about mortgages and
how to save your home if you want to keep your house.
Exactly. Okay. And here is the first trivia question. All right. And remember, it's athletes who have fallen from grace. Brian's favorite subject.
Absolutely.
Okay. But last time I had a NASCAR question, but you
Figures.
weren't here.
Of course. You always have
I
that
knew
one.
you'd answer.
Uh-huh.
Okay. This quarterback fell from grace due to dogfighting. Who is he? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. This quarterback fell from grace due to dog fighting. Who is he? 888-912-1190. Make sure to include your name and your email address, and make sure you speak slowly and spell out all your information, especially your email address, one letter at a time, slowly, please. Thank you very much, and we are going to be right back. Good. That's our first segment.
All right.
It's at the tip of my tongue. Oh, that's
Vic
right,
something.
Vic.
Vic,
Something
holy
Vic, I think.
smokes.
Right? I know. Maybe I don't know
Vic-
sports, but I read
It's
the news
Vic-
once in a while.
It's Vic's Vapor Rub.
That's who it is. Yes, exactly.
Michael.
Having fun so far?
Vic Clark, is that it?
Yeah, I am. So
Vic Clark, and he just died.
Oh, right.
Oh, that
it's a little harder than it looks. I keep. So thanks for a couple of saves there.
No, it's fine. That's what we're
Yeah.
supposed to be doing. We're saving each other. So, and as you see, we
jumped
almost
around a
immediately
little
went off
bit.
the
Yeah.
went off the question thing.
Oh yeah,
That's
we've
just-
actually asked and answered most of the
I know,
questions.
we're done.
Already.
Yeah.
Poor guy. Comes all this way, now we go, oh, that's it?
Now all the next
There's
questions are
plenty
going to be
to talk about, yeah.
surprises.
Yeah, that's right.
Probably
very good.
No, you'll do fine.
That's funny because you actually are on top of the new numbers that came out from Zillow. The third of the homes, it's 1.2 trillion in negative equity. It's just stunning amount.
Amazing.
Wow.
Yeah.
That's the
That's
negative
amazing.
equity. That's
Yeah,
not
that's
even.
amazing.
Yeah, that's right, that's just, yeah.
Yeah.
I'll lead in with the second question, or with the first question in the second segment. I
Okay.
think we can talk a little bit about what solutions are available today for families underwater. And you can basically say, well,
Yeah.
none of them are good.
Yeah.
I wanted to ask
Except
about
for your program.
something that's not on your list, and you can tell me if you don't
Please
want me
do.
to ask
Ask
this.
it.
But
In fact, I had assumed we were getting more questions there. I
Well,
would have been more thorough.
you know, we do a lot of short sales as well, and typically in a short sale approval, the banks prohibit you from having any type of deal or anything with the occupant. They want the occupant out.
Yeah, it's the arm's length
escrow.
disclosure. Yeah.
Right.
I'm familiar
So
with those.
obviously you found a way to be able to do this business model despite the bank's best efforts at preventing it,
Mhm.
and it's an interesting.
So I can answer that off
topic
air,
to
I
make.
can answer that on the air, but the short answer is that the best response to that is just direct honesty.
It's fully disclosed, in other
Yeah.
words.
So
Yeah.
we
Bank
tell
either
them, look, we're
approves it or the
buying for
bank says,
cash
"F no, I'm not
as
gonna do it."
is
Yeah.
with no reps and warrants. I'm not gonna take any reps and warrants. If they got a better offer, they should take it.
Mhm.
I'm here with cash to buy the house and I wanna,
So they
free
say,
to sell it to whoever I want.
and they say, hey, that's fine. We don't care that you're selling it right back to the homeowner. We'll let that go.
I mean, the whole thing is, you gotta have, basically, it's a short sale, isn't it?
It is, yeah.
No, so very little, that's a real common misconception.
Okay.
If I asked you how many foreclosures happen per year in California versus how many short sales, just
Okay,
pick a number.
ask the question again?
Yeah, how many foreclosures
Yeah.
versus how many short sales happen per year in California right
Oh my
now?
gosh, yeah, I would think a
Foreclosures
whole bunch
versus-
more short foreclosures than short sales.
I would say like 4-1 maybe. something.
Yeah, I bet you it's like,
10 to
for
1.
every 2 foreclosures, there's 1 short sale.
135,000 to 140,000 foreclosures per year in California right now, real stable. How many short sales, if I told you that is the number, how many short sales do you think happen per year?
I don't know.
Now, I'm gonna say 10,000. Is it
Uh,
5,000.
Okay, I was close.
Really?
20 to
10 to
1.
1.
That's
It's
that is
just,
ridiculous.
that's why no
25
one's
to 1.
making any money in real estate on
Yeah.
shorts. Shorts
Yeah.
take forever and they
Oh,
don't go
right,
through.
the math,
Yeah,
25.
but, you're, okay, so you're not actually doing a short sale, but you're still having to negotiate with the bank.
Well, it could be a short sale. It could be a short sale, a direct no purchase.
I buy it from
direct
anybody that wants
buy.
to sell it to me. The easy way on short sales, which usually gets the focus, but I like to point out, there's like 10 to 1 volume on the backside of that. This is,
Wait a minute, hold on, maybe I'm trying to understand the situation. Okay,
Mhm.
I own a house that's
Yeah.
worth $1 million, and I owe 1.4 million.
okay,
Okay. If I owe the bank 1.4,
right.
how much are you paying bank? Because you can
I
buy
certainly
new
am not gonna pay market rates on that, so I typically
800.
pay, yeah, I typically.
That's what I'm
pay
saying, the bank
800.
has, yeah, that's what I'm saying.
Right, the
The
bank has,
the
right,
bank
it's a short pay,
that's what I'm saying.
absolutely.
It's still a
Okay,
short
so
sale.
I thought for a minute you were saying, no, the bank doesn't have to, and I go.
Oh, no, the bank
Well,
does.
no, what I'm saying is if they don't, then they sell it at foreclosure. I'm perfectly happy to buy it at foreclosure for cash.
Yeah.
And that's the big difference between us and someone else. It's like.
Yeah, but if the bank may say they're gonna foreclose, and they're gonna go.
Well,
we're
then
owed
maybe it may
1.8.
go REO,
They
and then
do.
he's negotiating with the listing agent saying, I'll pay
Afterward.
800
I get about
for it.
3
Exactly.
bites of the apple. So
Yeah.
Yeah.
Yeah, I mean, I gotta buy it, I'm happy to buy it ahead of time, and the bank's gonna make the most money there.
I agree. Sometimes.
But they're rational, and they are.
Smart
Yeah.
now.
And then I buy it
They
for
weren't
cheaper
before.
later.
Yeah.
3 bites of the apple, I like.
Yeah.
All right. So you're gonna answer Vic Clark. Works for
I
me.
just know it's Vic something.
No, it's,
Okay.
that's his
No,
last
no,
name.
no.
Oh.
No, let him answer. Let him answer.
Okay.
We like to have fun with Brian.
All right.
Good sport. Right?
Yeah, that's right, 'cause they don't know sports.
Can't store 5 seconds here. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, California's fastest growing private lender.
Yes, indeed.
Yes, indeed. And Brian Burke of Praxis Capital. When we came to our first commercial break, we asked this first trivia question. This quarterback fell from grace due to dogfighting. Who is he? Brian.
It was Vic something.
Vic somebody.
Vic Clark.
Vic Clark, or Vic's Vapor Rub. Vic
Vic-
Clark. Did he
Michael
just die?
Vick.
Oh.
Michael Vick.
Michael
Michael
Vick.
Vick. That's who it
Yes.
is. Okay. We're in the studio here with Mark Moore from Home Liberty, who's showing us some strategies with regard even to the short sales and financing.
Well, it's
And-
mostly about how to keep your home, which I think is
How to
really
keep your home.
fascinating because I know that there's been an industry ever since the market, tanked, 4 or 5 years ago, that are out there supposedly helping you to save your home. And I think the Home Liberty thing is a little bit unique. We're talking about buying the home either from the bank or at auction and selling it back to the occupant. In other words, putting together a deal and with the homeowner. But I'm curious, Mark, are there other solutions out there, or what solutions are available today, really, realistically, for people who are in their homes underwater and want to keep their home?
Yeah, because he's not one of those crazy companies that charges a lot of money to do loan modifications, which
Yeah, no, that's,
or else I wouldn't have you in the
big
studio.
no-no. Yeah, well, thank you. So the options for a family that finds themselves severely underwater, and that's one of the things I like to separate. If you're a little underwater, 10, 20, 30K, it's not worth
Yeah,
it.
because the bank's probably not going to be too excited about it.
Just suck it up, you'll get through it. We're talking about severely underwater. These are life-changing amounts of money when someone is
$100,000,
100K, 200K underwater.
Or more. You see sometimes a $500,000 loan on a $225,000 house. That's not unusual.
Yeah.
It's not unusual,
That's
and
right.
it's tragic. And that's,
Central Valley.
Yeah.
that's truly life-changing. I mean, imagine if somebody walked into your house and gave you a $200,000 check for your family's future post-tax. I mean, it's life-changing. So that's really the situation that people are in when they think, my money, if my house is not an investment, I'm just gonna stick it out. That's important when you ask, what are the options for someone that's severely underwater? There's really two. One is to do something about it, and the other one is to just suck it up and pay. And the truth is, about 92% of the people are just gonna stick with it.
Because they don't want to necessarily lose their house. There's a reason why they're in their house. They
Well,
wouldn't want to be there.
and that's an interesting topic because all of the government intervention that you've seen out there circles around loan modifications and lowering payments by reducing interest rates and extending amortization periods. But what I've found is people have asked me, well, when is this foreclosure crisis going to go away? When are we going to see no more short sales? In a year or two, it's all going to be history. But I don't think that's the case at all because what's happening is you give somebody a loan modification and now they still owe $500,000 on their $225,000 house. Yes, their payments are affordable and they can pay that for the next 30 years, but people's circumstances change. So now, you have a kid, or you become an empty nester, or you get a job transfer, or whatever reason it is that you need to move, you're then going to be faced with only one exit option for that house, and that's a short sale, or perhaps letting it go to foreclosure, and that could be 2, 3, 4, 5 years from now. So what you're doing is a little bit different than that because you're solving the underlying problem of that future negative equity. So if 3 years from now they needed to move, they actually would have positive equity in the house and they could sell the house on the market. Is that true, or am I missing something?
No, you've got it exactly right. So every other program that's out there that I'm aware of is designed to reduce monthly payments.
Yeah, because the bank isn't just going to automatically, if you go there and say, you know what, bank, I owe you $500,000, my house is only worth $200,000.
They won't wipe out principal.
Exactly.
They absolutely, that's a
Especially if you're paying.
non-starter.
Well, everybody else is going to ask for their principal reduction. I'd ask for mine, wouldn't you, Mark?
Absolutely.
No, I'd ask to pay double, because I'm a nice guy.
Well, you could pay our portion.
Yeah, okay. Yeah, I told you, if I had your money, I'd throw mine away.
I'll give it to Edward. It's funny, that is a common misconception because an overwhelming majority would not ask for the principal reduction. They just suck it up and pay. And they think they're doing the right thing. because they've been told that their whole life.
Well, I think the first thing is if they're afraid of their credit rating going down, right? Isn't that part of
That's
the
part of
issue?
it, I think, yeah.
That's where there's a lot of discussion about that. The fact of the matter is, the number one thing people are worried about is what I think Mark mentioned earlier, is losing their house. In order for someone to proactively do something about their 200K of their family's financial future, they got to get comfortable with losing their house. You can't, this isn't a game.
I kind of understand that. I mean, I'm thinking, okay, I love my house, and what happens if I go to the bank and say, you know what, bank, can you lower this $200,000? I mean, there is this fear that somehow, even if I've been making my payment, that suddenly they're gonna kick me out of my house just for asking, and that obviously
Right.
isn't the case.
They can't do that, but to be serious about negotiating, as all you guys must know, if you're not going into negotiating with the ability to answer the or else what, if you don't give me this or else what are you gonna do? Then you're begging, you're not negotiating,
Yeah.
right?
So Mark, you can't guarantee though the homeowner you're gonna be able to save their home. Is that part of the plan on how you guys work?
Yeah, we can't, no one legitimately can. The fact of the matter is that it's a terrible decision forced on the family because of the fall in the market. They have to decide whether $200,000 of their family's future is more important than their address. And I can't give them both. They can have one for sure, and the other one, maybe. So they can keep the house, absolutely, suck it up, pay, and you're 200K underwater, and you've got 200K of lost opportunity for your family's future. Or stop paying, you're absolutely gonna get principal reduction, guaranteed. You may not keep your house. What Home Liberty does is very different from every other opportunity that's out there before us. First off, we're honest about that decision, and that's a decision they have to make. Once a family has decided to do something about their financial future, once they have decided that strategic default is in their best interest, then we can come in and give them a legitimate, real way to give them a chance to keep the home and to keep the home at a price that's going to be at or near current market value.
Okay, and here's where really the nuts and bolts.
Mhm.
How much would it cost? Okay, so let's say I had $1 million house that's now worth $600,000, and I owe $750,000 to the bank, and I'm not making my payments, and I call you. What would it cost me?
So, one of the big differences between Home Liberty and anybody that's not legitimate is we don't charge anything up front. So we absorb all costs. We charge literally nothing, not a penny, if in fact in the end we don't save your house. We don't ask you to sign over part of your title. We don't ask you to
Love that one.
put down, $500 and I'll try real hard.
Yeah. And you did say you charge either 10 or 12% depending upon what kind of down payment. In theory though, if I've got a down payment, aren't I making my payments up to the house?
No, that down payment is all the money you save from not making your payments.
That's
probably
exactly
where,
right.
That's where you got that down payment.
Now I get it.
Right.
The light bulb just came on. Okay.
Yeah, the average time in California today is 234 days from notice of default to foreclosure.
I thought, didn't we say before it was 500
Well,
days?
That's in Florida.
Yeah, well, nationally, I think the
Definitely.
number's actually gone higher. It's been creeping up. I know we saw statistics.
When you-
also
And if you could
500
say it
days.
30
yeah.
years, you would have made.
In
no,
judicial
never mind.
states, it's over 2 years now.
Yeah, that's right.
years.
Yeah, when you factor in the judicial states, it bumps the whole
Oh my
average up
gosh,
because
so,
they're so
okay,
long.
so one of the strategies is you don't make your payments, and audience, I'm not recommending this, I'm just kind of talking out loud here. You don't make your payments for 2 years, save all that money, and now you got this big down payment to be able to say, hey, get me out of this,
Let me buy my house
Yeah,
back.
buy the
buy
house
my
back.
house back at a low price, wow.
Right, and then we give it to you for the first 13 months with 0 interest on the Fast Track to Freedom program. Now you've got a demonstrated repayment history. You own at least 20% of the equity in your home. And you should be teed up to go refi and get bank rates. We tell our customers, we're not a bank, we can't compete with bank rates, we're not gonna try.
Okay, but I'm gonna ask you this hard question,
Yeah.
is it ethical to default on your underwater mortgage?
That is a really great question. I'm sure you'll get lots of strong, opinionated responses. I want to split this very carefully between is it legal or is it ethical. There's ways to do this that are illegal that many people do. Home Liberty is adamant about the legality of this. We spent the first 9 months of our startup's existence just making sure that everything we did was legal. So legal,
Okay.
emphatically yes. Yeah, I know you may ask a question about that, and I'll talk directly to that on the arm's length and how we get around that, or how we deal with that directly and honestly. Ethical is a very different one. So first off, I want to agree, this is not a decision. I'm not telling anyone to stop making their payments. This is a very difficult personal decision.
Sure.
You know, take it serious. Do not play games. Consult with an attorney. Consult with a tax consultant.
Yeah, because
But-
there may be some tax issues about whether or not you have to pay
Well, plus
taxes
I would
on the
imagine,
relief of debt.
I would imagine it doesn't work in every circumstance. I mean, there must be some circumstances where the lenders, they won't approve the short sale, or there's a second that gets in the way, and then you think, well, we'll buy it at the auction, but the lender opens to bid at twice what the house is worth, they do a full credit bid. You know, then you try to do an REO, but by then they've already evicted the occupants, and now you're kind of reset back to zero, so.
Sounds
to
like
make
you've done
it-
this a few times.
Well, I've kind of been in this business
Yeah.
a while, so, you know, to say, oh, I'm gonna stop making my payments because this is what I'm going to do, it may work for you, but it also might backfire on you.
There's no
as well.
guarantee, I mean, that's what we were talking about
Zero
earlier.
guarantee.
Okay,
Yeah.
you know what, guys, we're gonna cut to a quick break.
And then we'll cover the
Come-
ethics.
Then we're gonna cover the ethics, because I want the audience to hear that. It's, I'm sure it's more than just a 2-second
it is.
answer. Okay, when we cut to our second commercial break, and we are going to ask this question, here it is. This manager bet on games and lied about it. Talking baseball here. And he's still banned from the Hall of Fame. Who is he? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. The weather is fantastic. Go check them out. Call 888-912-1190. That's 888-912-1190 to answer this question. This manager in baseball bet on games and lied about it, and he's still banned from the Hall of Fame. Who is he? Call 888-912-1190. Make sure to include your name and your email address, and remember to speak slowly and spell out each letter of your email address, please. And we will be right back.
Is it like
Excellent.
Uberoth or something like that?
Oh,
Now
they have
you're
the same
close.
first name. They have the same first name,
Do they?
Uberoth and this
That's
person.
right.
Where did I get that name from?
And-
What did he do?
It's not Bob Euchre?
No, Bob,
No.
Down the front row.
I must be in the, I must be in the front row. This is a very, you know what, Kramer, this is a very dangerous show. I'm bleeding.
I noticed.
You weirdo.
And you couldn't scratch?
Oh, I know. I'll bet it's Pete Rose.
Wow.
Man.
I bet.
I-
2 for 2.
Hey, how smart is that, right?
Okay,
He's my man.
now
thanks,
I got it.
thanks, Kramer. Appreciate
Oh, you bad boy.
I wouldn't do that.
They are.
it.
Okay,
Funny.
so I've got a question for you.
Mhm.
This actually this
No.
having to do with the trivia question here.
Oh.
His. Oh, I'm sorry. Okay, the guy who kicked him out of, or didn't let him get into the Hall of Fame. His son is actually a fairly famous actor.
Axl Rose.
Is he an actor?
No, not at all.
I don't know.
No, he's a singer.
No, yeah, Axl Rose, you know, I know he's a singer.
And who is Paul Giamatti is the son, A. Bartlett Giamatti. His dad was the
Wow.
commissioner who said, "You're never getting in the Hall of Fame, Petey, baby." Okay.
Very controversial.
I know. I have a hard time keeping. I mean, guys like Ty Cobb get in there, and with all the terribleness he was about.
Right.
Okay, we'll get into the ethical part. Kind of getting close on time, so
Yeah.
maybe in the third, fourth segment, if you have any questions to go back and forth, we'll ask, after this question about the ethics, how do people get a hold of you?
Okay.
Okay?
Yeah.
Is that all right? Then we'll go right into email time?
Okay.
All right. Excellent show, my friends. Excellent. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt and Brian Berg. When we asked this second trivia question, here it was. This manager bet on baseball games and lied about it, and he's still banned from the Hall of Fame. Who is he? I know, Brian, you cheated, but go ahead.
Blank stares and crickets. Pete Rose.
Pete Rose, that is correct.
Thank you, Kramer, our videographer, for slipping me the answer when these guys weren't looking.
And I remember the day that he broke the Ty Cobb's all-time hit list, because that was September 11th. It was 1985, but I remember
A different
September
September 11th.
September 11th. And we're still in the studio here with Mark Moore from Home Liberty. And Mark, we were asking you about the ethics of defaulting on your mortgage for strategic purposes.
So yeah, as I was starting to say, it's a non-trivial decision, but as far as the ethics of it goes, it usually breaks down with people saying, pardon me, people saying that, hey, it's just a business contract, and there's no ethics in a contract. Another whole group of people say, no, that's a commitment you made. You got to honor your obligation. I believe the truth is somewhere in between those two. As anyone that's gotten into a contract, that something happened that dramatically changed the situation, like a contractor that comes in to put in a bunch of cabinetry, and then some storm happens and destroys the raw materials, and you got to rebuy. You would renegotiate with the guy. You'd say, look,
That's interesting. I mean, it's really, everything's based on what you can negotiate. But, by the way, I forgot to tell you, if you have to cough to the side. You're gonna blow out my speakers here.
Right into the crowd.
But to play devil's advocate a little bit, if I go to a car lot and buy a car, the second I drive that car off the lot, it's worth like 2/3 of what I paid for it. But I can't go back and, hey, I want you to lower my loan.
Well, no, you know what happened? I sold a car to an office roommate, and everything was perfect on the car. And then, literally within a week, something happened with the brakes or something. I had no idea, and it cost them like $320 or whatever extra. And I looked at him, I said, I feel bad about it. I go, let's just split it. And because I sold it to him as is, and I really didn't know there was anything wrong with it. But I thought that was just a fair thing to do. So based on that, will the mortgage company lower my mortgage in half?
Right. That was your pay it forward. Maybe they will.
Yeah, that's right. There you go.
Hey,
Well,
Mark, go ahead.
Well, actually, it's a great example. It's a great example because the fact that you would listen to it and then maybe or maybe not cut it in half, that's great. The fact that the banks won't even come to the negotiating table, they often won't even answer the phone call, and they lose your paperwork, they clearly aren't even interested. It's their unwillingness to even consider the situation or even consider principal reduction that forces it back into that it's just business. Because effectively at that point,
Sure.
they've declared war. And at that point, it's whatever the law and the contract allows. And the homeowners should obey the law and the contract.
Okay. And Mark, how do people get a hold of you if they're underwater or they think they're going to be underwater and in a situation where they want to still save their house?
Yeah, the best bet if someone is decided not to pay and they want to have a chance to keep their home, they should go to our website at www.home-liberty.com. That's the absolute best way. They can also get us at info@home-liberty.com, and they can call us directly at 408-489-4272.
Okay, thanks for being in the studio with us. Hang around. We're going to get the email time here.
Okay.
And Brian, this one, since we're talking about real estate here, I have been making offers on houses because I'm trying to buy a couple of rental properties, but I keep getting outbid by other buyers. How are you able to buy properties below market value so consistently while I can't seem to get any of my offers accepted?
Yeah,
That's a long email that we received.
That's a good question though, but I actually hear that a lot because at Praxis Capital, for listeners who don't know what Praxis Capital does is we purchase residential property that's distressed or in foreclosure, and we either rent it out or fix it up and resell it. And we're doing between 100 and 200 houses a year, and it's a pretty decent volume in our territory. And I hear from a lot of investors that say, "Gosh, I've been out in the marketplace in the same market that you're in, and I've made 5 offers and none of them got accepted, or I got outbid, or whatever. And how is it that you're able to do this so consistently and even do it at a discount to market value?" And the truth is, it's a business, and you have to have a system behind it. You have to have a dedicated approach. We have a team of about 15 people in our acquisitions division that does nothing but look at properties that come up on the market on the MLS, attend foreclosure auctions and sales, does research on foreclosure auctions pre-sale.
In other words, it's not for the faint of heart.
It's not for the faint of heart. It's not for somebody that doesn't have a lot of time. And most people who have a couple $100,000 to invest and want to go buy a rental property, they don't have the time to take away from their jobs to go out and make a full-time job out of searching for property. But that's what we do. So it's part of our investor base is comprised of people who have found themselves in that position, and they've attempted to buy a house on their own. They weren't able to do so, so they invest with Praxis Capital in our equity funds, and we've utilized those equity funds to purchase the properties. And they don't have to go out and find them. They don't have to manage them. They don't have to worry about how to run this business. All they have to do is take a return on their money.
Okay, and since a lot of listeners out there don't want to fix their own toilets and stuff, how do they give you a call?
Yeah,
I
right.
didn't say that. I didn't say that quite
not-for-sale
the right
side. That's
amount to
true.
say.
Yeah, the tenants, toilets, and trash. You know, we don't like to do that either. That's why we have property managers for that part of it. But you know, you can locate us at www.praxcap.com, which is praxcap.com.
Great, thank you. And Mark, we received an email here for you. Do you charge any garbage fees? Now, I know you're not the garbage man, so explain what that means.
Garbage fees, junk fees, soft fees, anybody who's borrowed money from either bank or a hard money lender, which is what Pacific Private Money is, I'm the broker for Pacific Private Money in Nevada, we're a hard money lender. And most people who borrowed money know that there's two cost components right off the bat, origination fees or points, and then junk fees, which include things like documentation fee, underwriting fee, admin fee. And the fact is that pretty much most all lenders charge some kind of administrative fees. The theory is that the admin or junk fees are supposed to help cover the overhead of running the business, and our profit is coming from the origination fees. And since we're all in business to actually make a profit, we like to separate that out. So that's the theory. And the good news about what we do at Pacific is that some companies really lay on the junk fees. They have 2 or 3 different fees, and we tend to like to do one, sometimes 2, but usually around the $1,000 mark is fairly common for our so-called admin or junk fees.
That's
But-
less than you'll find at a bank.
Well, yeah, it can be. It can be. I mean, it's important to ask if you're a consumer out there or a real estate investor and you're looking to borrow money to buy fix and flip, or borrow money out of your rental property to go buy more property, or whatever you need the money for. There's obviously what's the interest rate you're going to be paying for the money. Then there's how many points are you going to charge. A point is equal to 1% of the loan amount. And then what are your junk fees? What are your if you don't want to use a confrontational tone, you can say, well, what are your soft fees? What are your administrative charges? What is this loan going to cost me in total? And you should always ask for either a good faith estimate or a letter of interest anytime you have a conversation. Have them shoot you back something. Is exactly what's this loan really going to cost me? And that's the important part. And we do a tremendous amount of volume at Pacific Private Money. We're doing 20 to 25 loans per month, and I think the reason we do is because we are upfront with everything, our costs and fees. We don't charge any upfront costs, which again is key. We get paid when the loan closes. If we don't close, we've wasted our time, and we're not going to charge you for it, you the borrower. So for more information, you can go to our website at pacificprivatemoney.com. That's all one word. Or call us at area code 415-883-2150.
Right, and before we cut to the third and final trivia question, last week we had a special trivia contest, and the question was, the average American does this about 19 hours a week. What is it? Answer?
Sleep.
No, 19 hours a week.
It depends on whose schedule you got.
Is that what all those bags under your eyes are?
Right.
No, blank. same with the sleep part. It's listen to the radio, and maybe that means listening to our show. Of course, we're not on 19 hours a week, so that can't-
There's only 1 hour you need to listen to.
And that's right, exactly. Okay, and the winner was Sam from Castro Valley, and he won a beautiful 2-night stay at the Napa Valley Lodge, which is located in the
Nice.
heart of Napa Valley in the charming town of Yountville. And the Napa Valley Lodge is just steps away from the world-renowned restaurants, specialty shops, and award-winning wine tasting rooms. The Lodge welcomes you with friendly and experienced staff that are committed to making your stay as special as possible. You ready? This is what they get. The guest room features private verandas, many with courtyard, garden and vineyard views, vaulted ceilings and fireplaces. Hotel amenities include complimentary champagne continental breakfast buffet, swimming pool, whirlpool, spa, bocce ball court, poolside fire pit, spa treatment room, and fitness room. Call 707-944-2468 or go to napvalleylodge.com. And one other quick thing, if you guys checked out, remember that I told you about that place, the Bunt Cakes? Nothing
right.
Bunt Cakes in Corte Madera. Isn't that great? And holy
That's
smokes,
clever.
they have the best tasting bundt cakes, and they're very reasonably priced. Call 415-924-2500. They're going to actually give our listeners a 10% discount.
And they're guaranteed not to go straight to your butt.
Yeah, I like them. Very good, very good. Oh, try the red velvet cake. It's fantastic. And in fact, next week we're going to be giving a cake to a lucky listener. So here's our third and final trivia question. This cyclist was stripped of his title due to testing positive of a banned drug. Who is he? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. This cyclist was stripped of his title due to testing positive of a banned drug. Who is he? Make sure to include your name and your email address. And remember to speak slowly and spell out each letter of your email address for us, one letter at a time, and we will be right back.
$11.50.
Sorry about that.
No problem. Is it Floyd Landis?
Yes, it is. Holy
Whoa.
smokes!
Anything else he's drawing the blank?
I'm going out
Oh,
with
man.
style.
Yeah, you are.
are.
He must be a NASCAR driver, too.
No, it's a racing question.
It's
It's,
a
not
racing
stick and
question.
ball. This is not a stick and ball question.
Stick and ball. Like ball and chain. For the
Right,
ball.
right. You know, stick and ball sports. This has nothing to do with any of that kind of stuff. This is a racing question. So
Oh,
actually, I might have an answer.
man. Yeah, you didn't even have to ask a NASCAR question. That's
See,
very
yeah,
good.
you said you had a NASCAR question last week, and yeah, I wasn't here.
Famous number 24. Come
That's
on.
Jeff Gordon.
That's got to be Jeff Gordon.
Absolutely. I could come up with a whole bunch of NASCAR trivia questions for you.
Yeah, but then nobody would listen. No, I'm just kidding.
I know, that's probably true. Nobody would know the answer either. Nobody'd call in. They'd be like, how come we didn't have any winners this week? See, if you want to be guaranteed that you don't have to give away any prizes, you can do
Yeah.
NASCAR questions, and nobody will call in with the answer.
That's funny.
All right, so what do we do
Okay.
fourth segment? Do we want to do some more?
Okay.
Do we have any news you can use? I don't really have any.
I didn't bring much.
I don't have any
We can
articles.
Talk
I
more
just
about
have
home liberty.
I just have anecdotal things about what's going on in the housing market, much more so than any particular article. Was there any interest this week?
Well, I think we kind of fun to mention a little bit about Facebook. Just the
Oh,
fact
yeah, that would be a good one,
Hasn't
yeah.
really done much. What did it do today?
It's down. It was at 33 when I saw it this morning at 9,
Well, let me
8
just
o'clock.
double check really quickly.
Yeah,
Like,
see
It
what
went
it
down to 31 something.
Yeah.
What it is.
31.
Okay, the market went down 85 points. And
Is it closed? What time is it closed?
oh, actually, it's not even quite closed yet. Oh, it's actually 31, so it's actually up.
Should close at 1.
Facebook's 31.
Yeah, but wait, that doesn't make sense. It looks like the previous high was, or the previous close was 33. So why is it up if it's down to 1? Oh, now they're making it down. There you go. Pretty smart, right?
Refresh your screen.
Yeah, exactly. Yeah, it's down to 31. And what did it? Oh, what was it 38 that it came out at?
It came out at 38. Yeah.
Okay. Alrighty.
Yeah, it's
Have
the
fun?
giant
Yeah, I
sucking
am. The
sound.
most interesting stat that came out last week was the one about the lowest mortgage financing rates in 5 years. Because that, to me, is interesting to try to explain in the face of the increased little bump in residential purchases. What it tells me is there's a whole bunch of all-cash speculators playing in that game.
When you say interest rates,
The
are we at
mortgage
an
rate,
all-time
no,
lowest
not
mortgage
the interest rate, not the interest rate, but the rate of mortgage. The number of mortgages financed are predicted by the National Association of Realtors.
Okay.
The lowest in 5 years.
The lowest
2012.
number of mortgage originations.
Mortgage origination.
See, that doesn't surprise me at all.
Yeah.
Yeah, it doesn't surprise me at all.
But that tells me there's a bunch of
Thank
all-cash
you.
Yeah,
players.
because activity is through the roof.
I know.
But
speculators.
it's cash.
This
It's
would be
it's
20
guys like
speculators.
guys like us. You know,
Right.
we're out there. I mean, we're buying a ton of stuff, and there's a lot of other guys out there doing the same thing.
There sure are.
And it's all cash. Yep. And the only debt that's going to be placed against those is not going to show up as residential mortgage
It's
origination.
not. So it's kind of interesting. That to me was the most intriguing stat.
Cash is ruling the market right now. If you're not out there with cash, you're probably not going to get anything. And that goes back to the question about, gosh, I've been trying to make all
Right.
these offers and I'm not getting
Bring
any.
cash.
Bring cash. You know, I mean, we're putting out offers right now with 24-hour inspection contingency, close in 5 days,
Yeah.
all cash.
Yep.
And we're still getting beat out.
Yeah.
a lot of times, so.
Wow.
That's how we get to the front of that. We're 48 cash. We got all our inspection by the time we put it up front, way ahead of time.
Yep.
So we're like 48 hours cash close.
Yeah, and then they come back with us
All
with
you
highest
need.
and best, and we're like,
Yeah.
okay, no
Oh,
contingency.
10:29.
You know,
Yeah,
it's ridiculous.
exactly.
Yeah.
So I'm gonna just
It
keep
is
this
crazy.
tape if you're ready.
Okay.
Easier. Thank you.
So I don't know when this will be on TV, but it's gonna be Comcast Marin rather than, did you get my bloody leg here?
Oh,
Yeah.
Like I
your
said, it's
bloody
a-
leg?
This is a.
Do you want me to
Dan-
itch it?
That's, no, you're supposed to say, just take the darn thing off.
But I did it. Oh, you want me to take it off?
Well, that's what you're supposed to tell me to do.
Oh, take it off.
Take it off, okay.
So when is this, when is
Ah!
this?
Tomorrow,
Yeah.
well, the audio is 1 o'clock tomorrow, the video we don't know.
Well, there's
Bloody-
YouTube.
You guys
Take all my
bloody
hair
minute.
with me too.
Yeah,
Yeah,
he'll
bloody.
put up like the same day.
Bloody mess.
So tomorrow, next day.
Okay.
Good.
Great. Oh, look at that, that's crazy.
I think you were scratching.
I must have been. The Itchy and Scratchy Show. Okay. All right, 10 minutes, 29 seconds. Okay, so we're gonna get into, what was the first thing you wanted to cover?
We were just gonna talk about what's going on in the real estate
Real
market.
estate,
Yeah. Facebook.
Yeah.
Yeah.
And
What I heard you
Facebook.
guys talking about. Okay, let's get into Facebook first, then we'll.
Yep.
Okay, you guys ready?
Yep.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Brian Burke of Praxis Capital. And when we come to the third and final commercial break, we asked this trivia question. This cyclist was stripped of his title due to testing positive of a banned drug. Who is he? Brian?
Floyd Landis.
Floyd Landis, that's
See?
right.
A racing question.
Racing, yeah, no
No stick and ball sports. Yeah, I don't
I was
know the
wondering how
stick
many
and ball
people were gonna
sports.
answer Lance Armstrong. You know,
Yeah, I
but no.
figured a lot probably would, yeah.
A lot probably would. Before we get into a couple more not email, but a couple more mortgage type questions here. Do you guys see Facebook recently?
The giant sucking sound.
When it come out at 38, it's now down to about 31. That's about a 20-something% drop. That's not so good.
Not so good. When I signed up for a Facebook account, somebody said, "Welcome to the time suck." Now I guess if you buy their stock, it's welcome to the money suck. I don't know.
It is. Okay, getting into mortgage rates. Mark Moore is still in our studio here, and you were going to say something about something lowest in 5 years. What is that?
Oh, no, you were asking about some interesting stats, the news you can use. This last week, the one that was most interesting to me was the National Association of Realtors came out with some stats showing that 2012 is predicted to be the lowest volume of residential mortgage origination in the last 5 years. And with
What do you attribute that to?
Well, it's how do you square that with the increased volume, because there's a lot of purchase volume in the residential space today.
That's right.
The buyers have come back.
Yeah, there
Yeah.
seems like a lot of activity.
There is.
But they're using mortgages to buy those homes, so it must be
All
cash.
cash?
Yeah, they were paying cash.
Well, we said that some time ago, that there, Mark, I think your statistic was what, 25% of the people were buying for all cash?
Yeah, absolutely.
Of course, when prices are down 80%, it's a little easier, but.
I wouldn't be surprised if the number might even have gone up a little bit, Mark. You know, I don't know how recent
Actually,
that
I think,
statistic
yeah, I
is,
think
but-
it's been like 33 in a couple of reports I've read, and it's
Yeah.
different in different markets.
Of course, yeah, if you get, a $5 million market, well, I don't know, those people
They pay
probably
cash
have it,
too.
they pay
Yeah,
cash,
they do.
yeah.
You know, in the last 90 days, even the market's just heated up. It's actually on fire. You know, I was a couple of interesting statistics I was running the other day. I went under $200,000 in Sacramento, all of Sacramento County. There is a 2.2 week supply of homes with the volume of sales versus the number of active listings. It's just absolutely crazy. There's almost nothing on the market. I ran another city in Sonoma County. It's a city of about 40,000 people. In the entire city, there were 14 active listings on the market in the entire city. There's just very, very little inventory, and that's a big change from 6 months ago, and even 10 months ago there was a significant amount of inventory, but the market's definitely tightening and activity's picking up.
So what's going on? Are people just deciding not to sell because prices are low?
Well, there's
or-
two things going on. Investors are out there in force because the prices are great, and the price to rent ratio is like you've never seen before in California, coupled with the fact that foreclosure volume has been artificially low from completed foreclosures here lately. The trustee sale volume is down about 60% from a year and a half ago. which translates into fewer REOs, and the banks are starting to clear through some of their REO inventory, and they're just not putting as much to market at the same rate as they were. So fewer properties coming on, more buyers that are buying them equals almost nothing in inventory. And we've seen prices going up. In Sonoma County, we've seen about a 5% price increase since last June.
Do you think that's just going to continue?
I think it will if these metrics hold out the way that I expect them to. I think we're going to see continued price appreciation. It'll plateau for a little while and take a break.
So the banks release the floodgates.
Or release something, at least release some product, and I think we're going to see. We've seen a bump. I think we're going to see a little bit of a leveling for a little while, a year or two maybe, and then we're going to see the climb happen once again. I think 5 years from now, you're going to look back at this real estate market, you won't even recognize it.
You know, I just find it interesting that what I'm hearing a lot and reading a lot of blogs is there's a lot of skepticism about what's happening in the market right now. Skepticism over the fact that some people think we're in recovery, and others are saying that, well, this is a mini bubble. And
Yeah,
it's not
right.
real, and it's not real because we still have a horrible job market, and it's not real because of all the shadow inventory. So the biggest question, and even some of the smartest people, you know, in real estate that I've been listening to, nobody really knows what's going to happen. Are the banks eventually going to release more inventory, and will that?
Well, at some point they have to, because they're not in the business of holding on to real estate.
Well, how long have
Well,
you
they
been
seem
hearing
to
about
be.
that second
Right.
wave? You know, everybody's been waiting for that wave, and it just
Right.
it hasn't hit. It's just more of a high tide.
Well, and I've heard some statistics about that in some markets, people in their homes not making payments, that the average time has gone over 2 years in some markets, where
Yeah.
they've stopped paying the bank. The bank may or may not have filed a notice of default, but they haven't filed a notice of sale. It's not going to trustee's sale, or it's being continually postponed. And the time has gone now over 2 years for some people, and living rent-free, mortgage-free in their underwater home. I just find that just stunning.
Yeah, actually, we're seeing that statistic a little more directly. One of the really insidious things that doesn't get into the press because it's not reported is there's no law that says when the bank has to issue the first NOD. So it used to be, 30, 60, 90 days, and notice of default was issued. But the problem is that starts a whole cascade of problems inside the bank. We've got 1 or 2 customers right now that are over a year with no notice of default, a year of non-payment.
And
no
not
notice of
and not
default.
only is there no requirement on when they need to file that first NOD, but once the NOD is filed, there's no law that says when they have to file a notice of trustee sale to set an auction date. So, and once they put that house into default by recording the NOD, they don't ever have to do anything to begin to further the foreclosure process along, but record the notice of trustee sale. They don't have to record a new notice of default. If they record a notice of sale and they postpone the auction, after 1 year they have to record a new notice of sale and cancel the old notice of sale, but the notice of default's good until they cancel it.
Maybe those people haven't gotten one for a year because the bank doesn't have their address.
Right.
That's not it at all.
They don't have the
that's
documents.
right. We're talking about their home.
They don't
Yeah,
have the
that's-
documents. They lost the file, remember?
Yeah, but they lost the file and the robo signing and all
Right.
that stuff. Yeah.
So Mark, going back to your company, Home Liberty, helping people save their homes who want to keep their home when they're underwater, what how can you help them if they've stopped paying but the bank is silent and isn't doing anything? Is there any way you can kind of rattle the cage of the bank and start that
Or do you
process
want
forward?
to?
Yeah, how does that work?
That's a great question. One of the things to keep in mind is we're not their agent. We don't negotiate on their behalf with the bank. We're simply a buyer and seller of homes. We buy from the bank, we sell it back to them. So for the homeowners that we have, they're empowered in a way that's very different. For all of our customers, they perceive that as a good thing as opposed to a bad thing because it's another month of free rent. If the bank wants to lose the paperwork and refile, it's like, great, we'll give you another 30, 60 days. I'll refile as often as you like. I'm right
Take
here.
your time.
So it just puts them in a very different relationship with the bank. They actually truly are on par and they're negotiating instead of begging.
And you mentioned off the air that you used the term 3 bites of the apple for acquiring the property. What exactly are those?
Yeah, I don't want to characterize this as we'll guarantee you save your home. I like the way you put it earlier. Anybody that's considering strategic default should be 100% comfortable with losing their home, 100%. But with that said, we can buy it at short sales. There are very few short sales that happen in California, not a well-known statistic. And if we get it at short sale, great. If not, we're happy to buy it for cash at the foreclosure steps. We generally have the most motivated buyer, and we certainly have the lowest cost structure. So
How many transactions do you do a year generally? Where, I mean, we're start to finish where you actually complete it?
Well, we're a brand new startup, so we don't have, hundreds and
Oh,
thousands
okay.
of homes. But we are doing about 2 per month right now, and we want to build that up. We are focused primarily in the Northern California, Alameda, and Contra Costa areas, although if any of your listeners are in California, we've got a customer as far away as San Diego today.
Yeah,
So,
we've actually heard from listeners as far away as Honolulu.
yeah.
Now, do you only deal with California?
We're focused in California. We're actually authorized to do work in Arizona because it's a non-recourse state, and we'll expand into others. But right now,
I was gonna say Arizona and Vegas would be
I've done a
good
couple
places.
startups. I like Focus for successful startups, and we're focused in Alameda and Contra Costa.
And you did a deal, didn't you, where the homeowner lost their home at auction, a real estate investor had bought it, and you were able to buy from the real estate investor?
Yeah, I'm glad you brought that up, because especially with your listening audience, the people that buy homes in volume, they're gonna get stuck in ones with dug-in homeowners that wanna stay. Usually that's because that person wants to buy their home. They should call us.
Great. Mark, thank you so much for joining us in the studio. We're going to cut to our thoughts for the day. Why did it take Harry Potter 7 long books to catch the bad guy when it takes Scooby-Doo only half an hour? Remember that? Scooby-Doo! And it's a good thing McDonald's doesn't sell hot dogs. Can you imagine ordering a McWiener? No, neither can I. Tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Excellent.
All right.
Oh, Mark.
I'll get cutaways.
Yeah, nice.
Oh, yeah.